All right, let's jump right into this explainer and unpack what is honestly a fascinating financial detective story. Some stocks are pretty straightforward, right? They make a product, they sell it for a profit, and you value them on those earnings. Simple. And then there's TWST Bioscience, ticker TWST. This is a massive battleground stock that completely defies traditional valuation. Today, we're unpacking the ultimate paradox. How exactly can a company with compounding, explosive growth burn through cash at such an astonishing rate, yet still command a $3 billion market cap?
To understand why people care, just look at this number, 55.01%, and that is their year-to-date return for 2026. I mean, just sit with that for a second. More than a 55% gain in a single year instantly shows you why retail investors, and institutional growth chasers for that matter, are absolutely obsessing over this stock. It's like a flashing neon sign telling us the market is buying the company's story. But, as we know, context is everything, and a single snapshot really doesn't tell us how we actually got here.
Because if you zoom out, the history here is a wild, volatile roller coaster. We just talked about that recent 55% gain, and actually, they saw a very similar 54.8% jump back in 2023. And look at 2020. There was an absolutely staggering 572% gain in a single year, an absolute rocket ship. But right between those massive green years sits 2022, where the stock suffered a brutal 69% drop. This perfectly highlights the incredible, sweeping swings of investor sentiment surrounding TWST over the years.
Okay, moving on to Section 1, the revenue engine, fueling the market hype.
To truly understand the hype here, we have to look at the very top of the income statement. TWST Bioscience is generating serious cash, bringing in nearly $410 million in trailing 12-month revenue, meaning, their sales over the past year. We aren't talking about some tiny startup pitching a pipe dream here. This is a real commercial enterprise finding substantial market demand. Pulling in almost $500 million in sales absolutely forces the broader market to take you seriously.
But here's the thing. Absolute revenue is really only half the story. In this game, trajectory is everything. And their revenue growth is definitely no fluke. Just look at the compound annual growth rate, or CAGR, which tells us how fast they're compounding over time. Over a 3-year period, it's almost 22%. And over a 5-year period, nearly 30%. Growing your sales by 30% every single year for half a decade means your market share is expanding rapidly. This right here is the absolute bedrock of the bull thesis for TWST.
But Section 2, the plot twist, the bleeding bottom line. This is where we hit a massive paradox. Generating $410 million in sales is fantastic, obviously, but the ultimate goal of any business is to actually keep some of it, right? On the revenue side, they have a really healthy gross profit margin of 50%, meaning for every dollar of product sold, it only costs them 50 cents to manufacture it. Awesome! But after massive operating expenses like sales, marketing, and heavy R&D are factored in, well, they are deeply in the red, with a net profit margin of negative 27.7%.
And to put that negative margin into actual tangible dollars, just check out their free cash flow, negative $101.4 million over the past year. Every single year, $100 million just goes right out the door to keep this growth machine running. This is the burn part of our paradox. It's a massive capital sink, which means internally, right now, the business is just not self-sustaining.
And man, this capital destruction just bleeds into every single efficiency metric. Return on assets, negative 12.3%. Return on equity, negative 17.8%. And most glaringly, return on invested capital is sitting at negative 30.7%. So what does that actually mean for us? It means for every dollar of capital invested into the business right now, they're losing over 30 cents. If you're a traditional value investor looking at this, these numbers are probably terrifying you.
But wait, let's look at Section 3, the safety net. Solid liquidity, zero debt.
Because with $100 million a year literally flying out the window, you'd think bankruptcy is looming, right? Well, here is the silver lining that keeps the market so optimistic. They carry absolutely zero debt. Look, in a high-interest rate environment, massive cash burn combined with heavy debt is a ticking time bomb. But TWST completely avoids that trap. Furthermore, current and quick ratios sitting at over 2.4 mean they have more than 2.5 times the liquid assets required to pay off all their short-term liabilities. So bottom line, they have plenty of runway to keep operating.
Which leads us to Section 4, the valuation wall, pricing the unprofitable.
So how exactly do you value a $3 billion company with incredible growth but massive losses?
Well, traditional earnings metrics just do not apply here. The classic PE ratio, EV to EBITDA, which usually looks at operational cash flow, and price to free cash flow are all deeply negative. I mean, there are literally no earnings to measure against. Instead, the market is pricing TWST entirely on its sales multiples. Trading at a price-to-sales ratio of roughly 7.5, the market is essentially saying, hey, we'll happily pay $7.50 today for every $1 of revenue because we firmly believe that 30% growth will eventually scale into massive profits down the line.
Ultimately, evaluating a financial profile like TWST Bioscience requires weighing entirely conflicting realities. On one hand, you have a phenomenal top-line revenue engine fortified by an ironclad balance sheet with zero debt. But on the other hand, it comes at the incredibly steep cost of a $100 million annual cash burn. So as we wrap up this explainer, you really have to ask yourself, can their exceptional revenue growth actually outpace the massive pile of cash they're burning to achieve it? Will they reach profitability before having to dilute shareholders just to survive? That, my friends, is the ultimate growth versus burn paradox. Thanks so much for joining me today, and I'll catch you in the next explainer.